Hello students, a warm welcome to all of them. I hope you all are doing good and fine. In our today's session, we will be starting with the chapter number 14, losses for companies. Students, in our previous session, we had already covered the losses for individual, that is, losses incurred by a sole trader. And we had seen that students, if a business run by a sole trader is earning profit, we need to pay tax to HMRC on the profit amount. And if the business is loss making, will HMRC pay us, students? No. HMRC will not pay us the refund amount on the loss which we have incurred. But the HMRC will provide a relief such that we can set off the loss against future or previous year profits, such that we can reduce our tax in the future year and we can claim repayment of the or refund of the tax if we set off the loss against the previous year. I hope this point is clear. The basic rule for the losses, that HMRC will not pay us. If we have profit, we will be paying tax. If we have loss, we can claim relief. We can claim a relief to set off the losses against current year or future year profits. And students, we have already seen in the case of an individual, that is income from self-employment, the losses relief is available. We can set off against current year total income, then the loss can be carry forward to future trading profits, and students, and the loss can be set off against the previous tax year total income. These were the options or relief which were available for an individual. And we had seen that there is no need to follow any order. Either the individual can directly set off the loss from previous year, or can start from current year, or directly from the future year. Either he can start from either, students. We have seen this: previous year, current year and future year. Either the individual can set off the current year loss from previous year and directly move to future year, or set off against the current year and then future year, or directly future year. Or we had seen one more case, that is previous year, current year and then future years. And we had already seen that, students, in the case of current year, we had the option of setting off against the total income, and if remaining, we can carry forward. If not, we also had an option to set off against the capital gains, the chargeable gains. I hope this is clear. This was in the case of individuals. In our today's session, we will be covering the losses for companies, how we can claim, what will be the amount we can claim, and etc. So students, in our today's session, we will be covering these 5 topics under this chapter. Understand how relief for a property business loss is given. This we have already covered in our previous chapter, chapter number 13. But in today's class, we will be looking to the questions and other things. Understand how trading losses can be carried forward, how trading loss can be carried forward of a company. Understand how trading loss can be claimed against the income of the current or previous accounting period, how the loss can be set off against the current and previous year accounting period. Recognize the factors that will influence the choice of loss relief claim. What are the factors which will affect the choice of claiming the relief, whether we need to claim against, whether we need to carry forward the loss or claim it current year or previous year. Explain and compute the treatment of capital losses. So in our today's session, we will be covering trading losses, property losses and capital losses. So students, loss relief for a single company. So we will be covering trading losses and other losses. Trading losses, calculation of trading losses, relief available to claim the trading losses, factors affecting the choice of relief, When coming to the case of other losses, property business losses and capital losses. So these are the 5 topics we will be covering under this chapter. Students, before moving to our today's session, first we will look to an example. Students, in a previous session we have already seen that the corporation tax will be taxed on the taxable total profit. Taxable total profit. On this, we will pay corporation tax. I hope this is clear. We will pay corporation tax, and we had already seen that we have already covered that the dividend income for companies will be exempt from tax. Will be exempt from corporation tax. Corporation tax. This we have already covered, students. And the corporation tax, students, is charged on the TTP. But to determine the corporation tax rate, we need to calculate the augmented profit. Augmented profit we were calculating. Because why we were calculating the augmented profit? To identify the tax rate, the corporation tax rate. And the augmented profit formula was TTP plus dividend from non-associated companies. Non-associated companies. I hope this point is clear, students. The corporation tax is paid on the taxable total profit. But to determine the corporation tax rate, we need to calculate the augmented profit. And augmented profit is TTP, taxable total profit, plus dividend from non-associated companies. And students, the corporation tax rate were the small rate and the main rate. And we had upper limit and lower limit. The upper limit was 250,000 pound and the lower limit was 50,000 pound. And this upper and lower limit were reduced by short accounting period or number of associated companies. And students, we had seen if we need to calculate the augmented profit and we need to compare this augmented profit with the AP, that is augmented profit with statutory limit, students. We had already seen that we need to compare the augmented profit with the statutory limits in order to identify the corporation tax rate. And the small rate was 19% and the main rate was 25%. And we had seen that, students, if the augmented profit below 50,000 pound, then small rate will be charged. If augmented profit exceeds upper limit, that is 250,000 pound, the corporation tax will be the main rate, that is 25%. And if the augmented profit is between the upper and lower limit, then the tax will be paid at the main rate plus marginal relief will be available, students. We have already covered this. I hope this is clear. Till here we have already covered in a previous chapter. But students, when we will be calculating the loss and the tax saving, we will be following a different approach. The approach will be same, no issues. But students, and the main important point here is in the corporation tax rate, this will not act as a tax band. This will not act as tax band. If the augmented profit is within If it follows the augmented profit, it follows in any one limit, then we will be applying the one single rate. Then we will be applying the one single rate. I hope this point is clear, students. The corporation tax rate, to identify the corporation tax rate, we need to calculate the augmented profit, and the augmented profit needs to be compared with the statutory limit. The statutory limit are the upper and lower limit, students. And these limit and the tax rate which we have calculated, the corporate tax rate, will act as a single tax rate, students. It will not be like the individuals where we have tax band 0 till 50,000 this much tax, from 50,000 to 250,000 this much tax. No, students. It will be a single tax rate on the TTP, taxable total profit. But we have one case. Let's take an example. Before that, I'll be mentioning some rules, students. If we want to tax TTP in the form of tax band. Now, students, this is a totally different concept. This we have already covered here. Till here we have already covered. This was a single tax rate. This was a single tax rate which was applicable to the taxable total profit. We need to find the augmented profit, and then we were comparing it with the statutory limit in order to know the tax rate, and it will be the tax rate applicable on the whole TTP. But students, if we want to tax TTP in the form of tax band, then students, the company should not have dividend income from non-associated companies. That means, students, if we want to tax the TTP in the form of tax band, then the company should not have dividend income from the non-associated company. In that case, our TTP and augmented profit will be the same. I hope this is clear. The TTP will be taxable total profit. Augmented profit is calculated as taxable total profit plus dividend from non-associated companies. But students, if we have dividend from non-associated companies, then we calculate the augmented profit and we tax it. For calculating the tax, you need to follow this only, students, this method only, the single rate tax. But we have a case where we can calculate the tax in the form of tax band when the company does not have any income from the dividend income from the non-associated company. In that case, our TTP and augmented profit will be the same, students. Our TTP and dividend will be the same, students. In that case, students, the small rate will be 19%, that is 0 till 1 minute, students. The small rate will be 19%. The main rate will be 25%, same. But students, if the TTP lies between the upper limit and lower limit, then the main rate plus marginal relief, but the marginal rate will be 26.5. I hope this is clear. below lower limit, above upper limit, and between upper limit and lower limit. So students, if our TTP and augmented profit are the same, then we can use this as a tax band. Tax band. Let's take an example so students we have a better understanding. In our previous case, we had seen if we have augmented profit and dividend from non-associated company, we were calculating the augmented profit and comparing with the statutory limit in order to identify the tax rate, and one single tax rate will be applicable to the whole taxable total profits. But students, coming to the case where a company does not have dividend income from unassociated companies, then we can use this tax band to calculate the corporation tax. And for below lower limit, it will be 19%. Marginal rate will be 25% main rate, and if between upper limit and lower limit, it will be 26.5 students. It will be 26.5. So students, we will be considering an example so that we have a better understanding of this question. This how to use this, and this students will mainly be applicable in case of losses for the companies. If there is a loss, what will be the percentage we are saving? Because the calculation of marginal relief in the case of losses will be very difficult. So HMRC has provided this so that it will be easy in the calculation of the loss relief. So let's take an example, students. Let's take an example of TTP. We will be considering our TTP as 60,000 pounds, and dividend from non-associated companies is 0. So students, now we need to calculate the corporation tax liability. So first we will calculate in the normal method. So the corporation tax liability will be paid on the TTP. The corporation tax rate, we need to compare the augmented profit with statutory limit. So students, the augmented profit will be TTP plus dividend from non-associated company. This will be same as 60,000. So our AP and TTP will be equal. Now students, coming to the corporation tax liability on 60,000, our AP and TTP are 60,000. So the augmented profit is lying between the upper limit and lower limit, between upper limit and lower limit. So it will be taxed at the main rate plus marginal relief will be available. So students, into 25%, into 25%, it will be 15,000. Now coming to marginal relief. Marginal relief is upper limit minus augmented profit into standard fraction into TTP, that is 60,000 divided by augmented profits. So this will, the marginal relief will be students 250 minus 60,000 pounds into 3 divided by 200. It will be 280 students. So this will be 60,000 into 25%, 15,000 students. Now less marginal relief. So the corporation tax liability will be 15,000 pounds minus 2,850. So this will be 2,850. So this will give rise to a corporation tax liability of 12,150. I hope this point is clear, students. I hope this point is clear. Now students, as in our case, the TTP and AP are equal, then we can follow the tax band approach. TTP and AP must be equal. Then only we can follow the tax band approach, students. So students, now coming to the tax band approach. As our TTP and AP are 60,000 pounds. As our TTP and AP are 60,000 pounds, students. So now students, we will be applying the rule of the tax band. Now we will be applying the tax band approach, students. The tax bands will be, students, our tax band will be students 0 to 50,000, 19%, 50,000, 5,001 till 250 will be at 26.5%, and above 250,000 pounds it will be at 25%. So this is the tax band we can follow if the TTP and AP are equal, students. So in our case it was 60,000, so this will be the case of tax band. So 0 to 50,000 it will be at 19%, students. So this will be a tax of 50,000 into 19%, 9,500. Then 50,000 1 pound till 250,000 pound, it will be 26%, that is 10,000, the balance into 26.5%, this will be 2,650, and this will be, students, 12,150. 12,150. By following this approach, we got the same answer, students. This tax band approach will only be used if the TTP and AP are equal. And students, this is the upper limit and lower limit, and this upper or lower limit will be divided if the short accounting period and number of associated companies students. Number of associated companies. So students, now we will be taking an example how we will arrive to this 26.5% tax band. Let's take an example of A Limited and B Limited. A's TTP and augmented profit are equal for both the companies. For A it is 50,000 and B it is 60,000, students. So in case of A, students, it is within the A's TTP is equal, so it will be 19%. The corporation tax will be at 19%. So 19% means it will be 9,500, students, and the corporation tax for this it will be at Augmented profit is between the limit of 25% plus marginal relief. So the tax will be at 15%, 15,000. Marginal relief will be 2,850. So the corporation tax will be, students, 12,150. Then now, students, if a company has 50,000, it will pay at 19%, and if if the other company has 60,000, it will pay the tax at main rate plus marginal relief, because this is a single rate tax. Now coming to how we arrive at 26.5. So students, as we have seen, for the income above 50,000, and for the income, the TTP above 50,000, we are paying 12,150, and 50,000 9,500. So the additional tax paid by B will be 12,150 minus 9,500. This will be, students, equal to 2,650, and this 2,650 is paid for an excess income of 10,000. So this will be 26.5%. 26.5%. This is the approach how we will get the marginal rate of tax, 26.5. But this is for your understanding, students, no need. But please do keep in mind, if the TTP and AP are equal, then you can follow this tax band. This tax band can be followed. But students, if we have dividend income from non-saving income, dividend income from non-associated company, then we need to compare the AP with the statutory limit. If the AP is below the lower limit, then it will be at the rate of 19%, students. And marginal rate, if the AP is above upper limit, that is excess of 250,000, then it will be paid at 25%. If the AP augmented profit is between the upper limit and lower limit, then the tax will be paid at marginal rate, the main rate plus marginal relief. I hope this point is clear, students, to all of you. I hope this point is clear. The corporation tax you need to calculate as per the main rate and small rate, and comparing the augmented profit to statutory limit. But we can use the tax band. Approach, students. We can use the tax band approach if the TTP and AP are equal. If the TTP and AP are equal, students. Now coming to the cases for loss relief, students. We have covered that TTP and AP is equal, then we can use the tax band. Students. In that case, we can use the tax band. Now coming to trading losses. Calculation of trading losses. Trading losses are compared in the same way as tax adjusted trading profit. If tax adjusted net profit or loss, if it net profit, then less capital allowance will give rise to adjusted trading profit. This we have already seen in the case of individuals. Same rules. The tax adjusted trading profit, if it is negative, then further capital allowance will increase the loss. If it is in profit and the capital allowance is in negative and it is more when compared to the profit, it will create a trading loss. If a company has made an adjusted trading loss, the tax adjusted trading profit shown in the TTP calculation for that period will be nil. The TTP taxable, the adjusted trading profits will be, students, 0. We will be having a loss. Now the loss we can claim a relief. So students, the trading loss is calculated as the tax adjusted net profit or loss. If it is loss, then we will reduce the capital allowance. If it is already a loss, if we reduce the capital allowance, it will further increase the loss. Then adjusted trading loss. Adjusted trading will give rise to the figure of adjusted trading loss, students. Now students, moving forward to the relief for trading losses. What all are the reliefs which are available to an individual, which are available for an individual, students, which are available for an individual? So students, now we will be seeing the case of relief for trading losses. Relief for trading losses. Students, in this example, we had calculated here as per the, here we have calculated as per the augmented profit is compared to the statutory limit. This, it will be a 25, students. It will be 25 less marginal relief. So this will be 12,500 marginal relief if you claim, as this is above the statutory limit, because it must be below, it should not be 50,000 equal, it should be less, it should not be equal also. So marginal relief of 3,000, we will be having a tax of 9,500. Then the excess will be, students, the excess will be 2,650. We will arrive to the marginal rate tax. I hope this is clear, because we have already studied that the AP must be lower than the upper limit. It should not be equal also. It must be lower than 50,000. If it is 50,000, it will fall between the limit of 50,000 and 250. This is just for your understanding, students. This how we arrive to the 26.5, the marginal rate tax rate. But if the TTP and AP are equal, then we can use this tax band 0 till 50,000, 19%. 50,101 till 250, 26.5%, above 250,000 at 25%. If the company has dividend from, if the company have dividends, if the company have dividend from non-associated companies, then we will compare the augmented profit with the marginal, the statutory limit. If the augmented profit is below 50,000, then 19%. If above 250,000, 25%. If between 50,000 and 250,000 pounds, we will apply main rate plus marginal relief. Now students, the first case, we have seen the calculation of, trading losses. It will be tax adjusted net profit or loss. If the tax adjusted figure is net loss, then further we will less capital allowance. By reducing the capital allowance, the loss will further increase. The loss will further increase to students. I hope this is clear. Now coming to the reliefs. The reliefs for trading losses which are available. There are 4 ways in which a company can offset trading losses. Relief for trading losses. Same. Carry forward relief, current year relief, current year and prior year relief, and terminal losses. Terminal losses means when the company ceases its trade, then the terminal loss relief will be available. Now students, we will be covering these relief in a more detailed way. So it is very simple, students. Max to max, you need to remember 6 to 7 lines. The whole trading loss relief for companies, it will be done. So let's take, so students, the tax relief, the tax relief options. So we have carry forward relief, current year relief, current year and prior year relief, and the fourth option is terminal loss relief. So these are the four reliefs available for the companies. But students, we have already seen in the case of individuals, here students, in the first basic point we have already seen, before moving forward to our session, we have already seen that in the case of an individual, the losses for sole trader, the company, the loss set off for individuals, either the loss can be set off previous year and then directly carry forward, either current year and then carry and then future year, if previous year, current year and then future year. But students, coming to the case of companies, students, there is no option. We need to follow a strict order. Either the loss can be set off against the future year, directly future year. If current year, then future year. If not, current year, previous year, current year, previous year, and if any remaining loss, then future years. So students, here we cannot start directly from previous year. In the case of companies, either the loss can be set off against the future year, current year, if remaining loss, directly to future year. If current year loss, claim current year, then carry back to previous year. If further loss is there, then future year, carry forward it. But students, in this case, in the case of companies, we cannot start from the previous year. To claim for previous year, the loss needs to be set off against the previous year income. We need to first claim against the current year total income. We'll be covering in more detail. Now coming to the first relief, carry forward loss relief. The key features of this relief are: loss is carry forward for offset in future accounting period. That is, the loss is carry forward for offset in future accounting period. The loss is set against total profits before qualifying charitable donations. So students, in the case of companies, always the loss will be set off before QCD. It is possible to restrict the amount of loss relief, that is, partial claim is allowed. The possible to restrict the amount of loss relief. It is possible to restrict the amount of loss relief. The loss can be carried forward indefinitely. Same in the case of individuals. There is no need to make a current year or prior year claim first. So there is no need to make a current year or prior year claim first. Directly the loss can be carried forward to the future years. A claim must be made within 2 years of the end of the accounting period in which the loss is relieved. So students, the carry forward loss relief claim must be made within 2 years of the end of the accounting period in which the loss was claimed or relieved. Claimed or relieved, both means the same. And students, the carry forward relief, there is no need to set off first current year and prior year. Directly we can carry forward. This we have learned. And students, the carry forward relief is available against future total profits before QCD. So these are the three important points. Carry forward relief, students, the carry forward relief, the losses can be carried forward for future years. There is no need to set against the current year or prior year. Directly we can carry forward against available future total profits. And partial claim is allowed. The loss is set against total profits before qualifying charitable donation. That is future year total profits before qualifying charitable donation. And the claim must be made within 2 years of the end of the accounting period in which the loss is claimed or relieved. I hope the carry forward loss relief is clear. Carry forward loss relief. The loss can be carried forward and set off against future total profits. Losses can be carried forward after a current year relief only, means current year then future year. After a current year, prior year and then future year. If no current or carry back claims are made, means if current year and carry back is not made, then directly it will be carry forward to the future years. But students, we have seen in the case of sole traders, we can only set off the carry forward relief against the same trading profits, but in the case of companies, it is against the total profit. So this is the distinction, this is the difference between or distinguish between the loss relief for companies and individuals. As we have seen, the loss relief for carry forward loss relief is also available for individuals, but it can only set off against the same total profits, same trading profits, not the total profit. In case of individuals, it will be the trading profit, same trading profit. But in the case of companies, it can be set off against the total profits. Now coming students to the carry forward relief. Carry forward loss relief. Carry forward loss relief. Loss can be set off against future. Loss can be set off against the future total profits. That is, loss must be set off before QCD. Losses, that is, the losses can be set off against future total profits. That is, losses must be set off before QCD, and the claim must be made within 2 years from the end of accounting period in which the loss was relieved. So these are the two important points. Carry forward loss relief. The losses can be set off against the total profits. The loss can be set off against the total profit, future total profit. But students, in the case of individual, we had seen that it is set off against the same trade only, but there is a difference in the loss relief for the company. It can set off against the future total profits. Now we will be solving a question so that we have a better understanding for the future or carry forward losses. But students, please do remember one important point we have covered, that in case of companies students, in case of companies students, the losses can either be carry forward current year or current year then prior year. So order needs to be followed, students. The order of the claim needs to be followed. The order means, students, either we can carry forward, set off against the current year, further remaining loss, carry forward it. Current year if you are setting off, then prior year, then carry forward. So directly we cannot set against the previous year. First we know set off against the current year, then only we can set off against the prior year. We'll be covering in more detail. First we are covering the carry forward relief. carry forward relief. Now coming to the question. Carlos Limited had the following results for the year ended 31st August 2023. Gross profits £30,000, less expenditure, depreciation, allowable cost, and net profit as per account. The capital allowance for the year amount of 21,000. Calculate the tax adjusted trading losses for the year ended 31st March. So students, the tax adjusted trading losses will be calculated as net profit per account. As per account, we need to calculate the tax adjusted figure for students. So it is 13,000. The depreciation will be, students, disallowed. So adding back depreciation, as it is a disallowed expenditure. So in our case it was 5,000, and the other it is given as allowable cost, so no issues for that. Then this will be tax adjusted net profit before capital allowance. So it will be 18,000. So let's students, less capital allowance, in our case it was 21,000. So it is a negative figure of 3,000. So this will be tax adjusted trading loss. It will be tax adjusted trading loss, students. It will be tax adjusted trading loss. I hope the first question is clear. The calculation of tax adjusted trading loss. Calculate the tax adjusted trading loss for the year ended 31st, assuming the fact are the same expected, that the company made a net loss per the account. So the company has made net loss per account. So net loss per account. So it will be, students, 10,000 loss already the company has incurred, plus net loss per account, then add back depreciation. So it will be 5,000, students. So the tax adjusted trading loss before capital allowance will be, students, 5,000 negative. Now we need to adjust the capital allowance. Capital allowance is of 21,000. So this will be, students, the tax adjusted trading losses. Tax adjusted trading losses will be 26,000, and the trading profit in TTP will be, students, 0. It will be 0. The TTP will be 0, and here also in the first case the trading profit in TTP will be 0, because, students, it is a loss. So loss we can claim a relief, but we have already seen here, students, if a company has made a tax adjusted trading loss, the adjusted net profit shown in TTP computation is nil, and, students, the companies will claim the capital allowance in full, because the loss can increase and they can get a relief as soon as possible. I hope the calculation of tax adjusted trading profit and tax adjusted trading loss is clear. Now coming to carry forward loss relief. Carry forward loss relief. P Limited has a tax year adjusted trading loss of 35,000 for the year ended 31st October 2023. The company's projected tax adjusted trading profits are as follows. So for year ended 2024, 14,000, 2025 6,500, year ended 31st October 2026 is 15,600. P Limited also has property income of £5,000 each year. Calculate P Limited taxable total profit for the 4 years ended 31st October 2026, Assuming that the loss for the year ended 31st October 2000 is carried forward and a claim is made to relieve as much of loss possible in each of the future periods. So now this is the case of carry forward. And students, in the case of carry forward, we have already learned the rules. Loss can be set off against future total profit. That is, loss must be set off. The loss must be set off before QCD. And claim must be made within 2 years from the end of the accounting period in which the loss was relieved or claimed. But students, in the case of individuals, please do revise. In the case of individuals, it was against the same trade, and the third important point in the case of carry forward is that partial claim is allowed. Students. But in the case of individual, partial claim was not allowed. We need to set off the whole amount against the first available trading profits. But in case of companies, partial claim is allowed and it can be set off against the future total profits. Now we will solve this question. And students, when we solve the losses question, two important points. First, we need to draw the columnar approach. We need to follow the columnar approach. We need to draw each column for each accounting period for companies, and column needs to be prepared for each tax year for individuals. So for companies, for each accounting period, the column needs to be drawn, and we need to prepare the loss memorandum. So now this is 23, so 2023, 2024, 2025, 2026. So students, it is for the year ended 31st October. Now our first case is tax adjusted trading profits. This figure is given for each of the year. It is losses means our TTP will be, students, our tax adjusted trading profit in the TTP calculation, if we have a loss, will be 0, will be nil. And 2024 it is 14,000 students, and 25 it is 6,500. And but students, in the case of individual, we were setting off against the tax year. But coming to the case of companies, the losses will be adjusted according to the accounting period, because the tax adjusted trading profit is calculated as per the accounting period. Then P Limited has property income for 5,000 each year. So property income of 5,000 each year, students. So this will give us total profits. This will be 5,000, 19,000. This will be 11,500 students, and this will be 20,600. Till here, I hope this is clear, students. Now students, in a question they have mentioned, calculate P taxable total profit for 4 years ended 31st October. Assuming that we need to calculate the taxable total profit. Assuming that the losses for the year ended 31st October 2023 is carry forward and claim is made to relieve as much of loss as possible in each of the accounting. So we have learned the 3 loss relief, students. Either current year, then previous year, if further remaining loss, future years. If not, directly future years. But here in the question they have already specified that we need to carry forward it. So students, and the loss relief is before the QCD. So less loss relief, here it is 0. Our loss memorandum will be, students, so that is the loss for the year ended 31st October 2023, it is 35,000. Now we are setting off against year ended 31st October 24, the whole amount, because students, partial claim is allowed here, but no QCD is that. Partial claim is allowed means partial, we can set off a certain amount so that our QCD will not get wasted. Only students, only in case of carry forward relief, partial claim is allowed, but in other case it will not be allowed. So why partial claim is allowed? So that the QCD will not be wasted. So whole 19,000, no QCD, so no issues. So our taxable total profits will be, students, 0, 0. Then 19,000, then remaining it is more, so it will set off against 11,500 also. So this is year ended 31st October 2025. So it is 11,500, students. Then the remaining loss still is, students, 4,500. 31st October 2026. That is 4,500. 4,500. So our taxable total profit will be 16,100. I hope the carry forward loss relief is clear. What are the rules, students, for carry forward? It can be set off against the total profits, including all the income. But in case of individual, it was against the same trade profit. And in case of companies, students, in case of companies, partial claim is allowed, but in case of individual, partial claim was not allowed. And the loss will be set off before QCD. Before QCD. I hope the carry forward loss relief is clear. Carry forward loss relief, carry forward for indefinite period of time, available against future total profit before QCD. Partial claim is allowed. Partial claim means we can restrict the amount which can be, we can select the amount which can be set off against the profit, so that our QCD will not be wasted. If, let's take an example, students, we are setting off the losses against future years, and the loss for current year, it is 10,000 pounds, and next year we have 25,000 pounds. And no, let's take an example here only, students. Partial claim is allowed, so this means, example, 10,000 pound loss, 2023, 2024, the income is 5,000 total. 2025, it is 3,000. And QCD, students, and the QCD, this is trading loss, and the QCD is, and the property income will be, students, 5,000 each year. The same example we have already. Let's take an example of QCD of 200 each year. So students, in the case of future years, set off here only property income, trading income 0, 5,000, 3,000. Let's take property income also, 5,000, 5,000 and 3,000. Here we are only claiming the carry forward relief. So total profit, total income, 5,000, 10,000 and, students, 6,000. But now coming to the loss relief. So first year we are not claiming it, we need to carry forward it directly, students. I hope this is clear. Loss memorandum. So the loss memorandum, year ended 23 something X date, then coming, it was loss of 10,000 pounds, students, then set off. We are only making here carry forward relief, only carry forward relief. So students, here we will not claim it, so less, this will give rise to less QCD is 200, so this will be, students, 4,800. Now carry forward it. So students, we have a whole 10,000, we can reduce the whole 10,000, but partial claim is allowed, students. Partial claim means we can elect the amount which can be set off against the total profit. But students, we have a QCD of 200. So first we'll claim the QCD and the rest amount we'll claim as the relief. So the rest amount will be 9,800. So here our income will be 0. So here the relief year ended, set off again year and 24, it is 9,800 and the remaining is 200 and further 200 it will be here students 5,600. I hope this point is clear students. I hope this point is clear. How the partial claim will be used. How the partial claim will be used students. How the partial claim will be used. I hope this is clear. Partial claim is allowed means then we need to use it so that our QCD will not be wasted. Qualifying charitable donation will not get wasted. The carry forward rules are clear. The carry forward rules, it will be carried forward an indefinite period of time, set off against the total profit before QCD. Partial claim is allowed and the relief needs to be made within 2 years of the end of accounting period in which the loss is relieved. Then if directly we can claim carry forward, the either current year then carry forward, either current year, prior year and then carry forward. I hope the relief, the carry forward loss relief is clear. Now coming to current year relief students. If a current year loss relief claim is made, trading losses are set off against the total profits before deduction of QCD of the same accounting period. So students, if we make a current year relief claim, that means the losses will be set off against the total profits before QCD of the same accounting period. A current year claim must be made for the whole loss. A partial claim is not allowed. So students, partial claim is not allowed in current year relief. Partial claim is not allowed in current year relief. Within 2 years of the end of loss making accounting period. The current year relief must be claimed within 2 years of the end of loss making accounting period in which the loss has incurred. Within 2 years from the end of the accounting period, within 2 years we need to make the claim. But students, in the case of carry forward, it was within 2 years from the end of accounting period in which the loss was relieved. But here 2 years of the end of accounting period in which the loss was incurred. Within 2 years of the end of the loss making accounting period. That means in which year the loss was claimed, that year accounting period, from that date till 2 years, 24 months. Within 24 months, we need to make the claim. Now students, carry back relief. First, let's make notes for the current year loss relief. So current year loss relief. So students, the current year loss relief, the current year trading loss relief, current year trading loss relief. So trading losses set off against, if the current year trading loss relief is claimed, then the trading loss will be set off against the current year total income. That is set off loss before QCD. I hope this point is clear. Students. Then no partial claim is allowed. One important point, no partial claim is allowed. We need to set off the whole amount. We need to set off the whole amount. We can't choose the amount of loss which will be set off. So in this case, QCD will be wasted. QCD will be wasted because QCD will reduce our taxable total profit on which the tax will be calculated. So in this case, the QCD will be wasted. And students, the further important rule is that claim must be made within 2 years from the end of accounting period in which loss was incurred. I hope this is clear. The current year trading loss. The trading loss will set off against the trading loss will set off against the current year total income. Current accounting period. The current year total period. The current year means current accounting period. So if we claim the current year relief, then the trading loss will set off against the current year accounting period. So it will be set off against the losses will be set off against the current year total income. Current year means, students, the year is your accounting period. It is the accounting period, students. The losses are set off against the total profits of the trading losses will be set off against the total income of same accounting period. It will be set off against the same accounting period. So students, it will not be a confusion. Same accounting period, that is set off losses before QCD. It must be set off before the QCD. It must set off before QCD. I hope the current year trading loss relief rules are clear. Set off against the current year total profits of the same accounting period. Partial claim will not be allowed, and the claim must be made within 2 years from the end of the accounting period in which loss was incurred. Now coming to the question, student. No question. Carry forward. Carry back. 1 minute, students. Loss making. Okay, no question. So no question is there, students. We will be taking a question. Let's take a question here only, students. We will solve a question. So let's take S Limited has the following results as follows. That is, the tax adjusted trading losses are 40,000 pounds. Property income for the year is 10,000 pounds. Everything is in pounds, students. Then chargeable gains for the year is 50,000 pounds. And the QCD is, let's take 10,000, students. No, QCD 10,000. This is the data. So now, students, the question number 1 here. show how the trading losses could be relieved with a current year claim. So we need to make a current year claim, students. We need to make a current year claim here. We need to make a current year claim. So solution will be, students, the answer will be, so students, the tax adjusted trading profit will be 0 because as we are incurring loss. So let's take the year ended as 31st March 2024. So TTB, then the property income will be 10,000 pounds, students. The chargeable gains will be 50,000. This will be our total profit. So this will be 60,000 pounds. And students, the column we have prepared, this is for the year ended 24. So it is for the finance year of 23. Finance year of 23. Finance year of 23, or either you can mention year ended 31st March 2024. So now, students, the total profit. Now the question says, so show how the trading loss could be relieved with a current year claim. So students, we need to also make the loss memorandum. So it will be year ended 31st March 2024. Losses, students, our loss is 40,000 pounds, students. Our loss is 40,000 pounds. So we can claim it against we need to make current year claim. So less loss relief, this is current year. So it will be 40,000, students. Less, as the current year relief we can set off against the same accounting year total profits, and the total profit is 60,000 and the loss is 40,000. So we can claim it less QCD. QCD is here, students, 10,000. So our taxable total profits will be, so it will be 10,000. So loss memorandum we have set off against the less current year total profits, that is 40,000, students. So it will be 0. I hope this is clear. I hope this is clear. And student, partial claim will not be allowed, but our loss is low, so we can claim it. Our loss is low, we can claim it. Now students, we'll be doing a same question, but we have a question number B. Show how we will be doing the partial claim concept. Show how your answer A will change if the tax adjusted trading loss is 10,000 pounds. I hope this is clear. Now the same question, students, year ended 31st March 2024. So our tax adjusted trading profit will be 0. Our property income will be 50,000. Our chargeable gains was 10,000. So this will be our total profits, 60,000. Now coming to the loss memorandum. 31st March 2024. The loss is 60,000, students. The loss is 60,000. The loss is 60,000, students. The loss is 60,000. The loss is 60. Now less loss relief. So students, but we have a QCD of 10,000. Our QCD will be wasted if we claim 60,000. Can we claim a particular amount? No students. Loss. Can we set off only 15,000 and 10,000 can we use for the QCD? No students. This is no, because partial claim is disallowed. We need to set off the whole amount. No partial claim is allowed. We can't choose the amount. We can't choose the amount. We can't choose the amount to set off against the loss. So in this case, it will be our total taxable profit will be, no, 1 minute students. After this, we have less QCDs, less QCD. So QCD, it is 10,000 pounds students, but we can't use it. So our TTP will be students, loss relief. So our TTP will be students 0. Our taxable total profit will be 0, and the QCD, and students, the QCD will be wasted, and the QCD will be wasted. QCD of minus 10,000 will be wasted. As we have already studied students, the QCD we can't carry forward or carry back. It will be wasted. It will be wasted. Current year total profits of 60,000. I hope this is clear. I hope the concept of current year relief is clear. Students, let's take another example in this question only. Let's take an example. Let's take example for the same question, the C question. For the same year, a tax adjusted trading profit is nil, and carry forward loss, we have previous year carry forward loss of 60,000 pounds. So our TTP will be students, tax adjusted trading profit will be 0, and then property income chargeable gains, property income was 50,000, here 10,000, so it is 60,000. Here will be total profits less loss relief. Now students, our current year tax adjusted trading profit is nil, so no loss in the current year. But we have a carry forward loss, the loss which have been incurred in previous year, the loss which have been incurred in the previous year. In this case students, loss memorandum, the loss memorandum will be prepared for the previous year only students, because it is a carry forward loss relief. So this year, so less loss relief now 60,000, but we have QCD of 10,000 students, please do remember. Now as it is a carry forward relief, we can elect the amount which we can set off. So we will only set off, so less QCD TTP, so less loss relief will be only 50,000 students, and the rest 10,000 will be carry forward, the rest 10,000 will be carry forward, the rest 10,000 will be carried forward, the rest 10,000 will be carried. So students, in this case we had a carry forward loss, so the partial claim is allowed. Partial claim is allowed. Partial claim means we can elect the amount which will be set off against the total profits, such that the QCD will not be wasted, and the partial claim is only allowed for the carry forward loss relief. I hope by solving this question we had a good understanding of current year and carry forward relief. The loss, the partial claim. Partial claim is not allowed for current year, but for carry forward it is allowed. Whichever loss has been carried forward from previous year it has been brought to the next year, that is has been carried forwarded, then partial claim is allowed. And the carry forward will be set off against the total profit. Current year also against the total profit. Now coming to the third relief, carry back relief. Carry back relief. Carry back relief. Any trading losses remaining after a current year claim can be carried back. So students, in order to set off the relief against previous year or carry back, current year claim is compulsory. Current year claim is compulsory. Current year claim is compulsory. Under carry back loss relief, trading losses are set off against total profits before QCD. So carry back also it is set off against the total profits before deduction of QCD or previous 12 months. So it is here students, previous 12 months. It is set off against the previous 12 months. Why previous 12 months students? Because if our current accounting period is for 12 months and previous year accounting period is for 8 months, then the carry back is available for 12 months, then 8 months, then further you can move 4 months. So any trading loss remaining after a current year claim can be carried back. Under carry back loss relief, the trading loss are set off against the total profits before QCD. In all the cases, the loss are set off before the QCD or previous 12 months on a LIFO basis. Last in, first out. Last 12 months. Last in, first out. Last in, first out. Last in, first out. A carry back claim can only be made if a claim for current year loss relief has been made first. So in order to claim the carry back, first we need to make the current year relief, then only carry back will be available. But in case of individual students, there was no rule like this. In the case of individual, there is no rule to set off against current year and then carry back. But in case of companies, to set off the excess loss, to claim the carry back relief, first the loss must be set off against the current year, then only it will be carry back to previous 12 months. The carry back claim is optional, must be made within 2 years of the end of loss making accounting period. That is, the claim must be made within 2 years of the end of accounting period in which the loss incurred. Now coming to the format students. Already we are clear with the format. Assuming the loss arises in 23, 2022, 2023 and 2024. So tax adjusted trading profit, it will be X and 0. If the loss arose, then our tax adjusted trading profit will be 0. Other incomes and chargeable gains, it will be total profit, and all the losses will be set off before QCD. So loss relief is current year, carry back and carry forward loss relief. So first current year, carry back and then carry forward, less QCD. Here QCD will be wasted. Wasted means no partial claim allowed in previous year also and current year also. So no partial claim will be allowed in current year and previous year. And for future years, partial claim is allowed. So this will give rise to the taxable total profit. I hope the format is clear. The losses will be set off after the total profit but before QCD, and the QCD of current and previous year will be wasted if the current year and previous year claim has been selected. Partial claim is only allowed for the future or carry forward loss relief. So the format is clear. Now coming to the rules. Now coming to the Now coming to carry back relief. Carry back relief, students. Carry back relief. Carry back relief, students. The carry back relief, trading losses remaining, trading losses, students, trading losses remaining after a current year loss relief can be set off against total profits of previous 12 months in LIFO basis. I hope this is clear. In LIFO basis. But students, let's take an example that my current accounting period is 8 months. Then this period you set up only 12 months. It is not that this is also less, so you will get extra 4 months. No, students. We will be covering this rule also in more detail. So it can be carried back for 12 months. Then the second, no partial claim is allowed. So in this case, QCD will be wasted. I hope this is clear, students. And the third important point is that students, the carry back relief can only be made if the current year loss relief has been made first. And the fourth important point is that the claim must be made within 2 years from the end of the accounting period in which the loss incurred. End of the accounting period in which the loss arose, was incurred. So claim must be made within 2 years from the end of the accounting period in which the loss was incurred. I hope the 4 important rules for the carry back relief. Carry back can only be made if the current year loss relief has been made first. Then only we can carry back. But in case of individual students, either we can start from carry back and directly go to future years. Previous year, current year, future year. So I hope this diagram we have already studied in the case of individual students. This diagram. But when coming to the case of companies, to claim carry back, we need to first set off against the current year. And after current year, carry back. If further loss is there, then we can move to future years in the case of companies. I hope this is clear. Now coming to the example, students. First we will do an example so that everything is clear. Carry back relief. M Limited has the following results year ended 31st March 22, 23, 24. Tax adjusted trading losses of profits 11,000, 22, 9,000, 2023 and 2024. We have a loss of 45,000 pounds, students. Then bank interest receivable 500, 500, chargeable gain 0, 4,000 pounds. QCD 250, 250, 250. Calculate the taxable total profit for all periods affected, assuming that loss relief is taken as soon as possible. So loss relief is taken as soon as possible means जितना जल्दी हो सके उतना जल्दी loss set off करेंगे अपन. So this means that we will set off as soon as possible. So to claim as soon as possible, we need to set off against the previous year, or first to go previous year, first set off current year, then we can move or carry back it. So students, the first step in the case of losses is we will make the columnar approach, the column for each year 22, 23 and 2024. I hope this is clear. Then we will make a loss memorandum. So 1 minute students, this space is too less, so we'll make a little bit up. Loss memorandum. So loss memorandum, so for the year 2024 year, the accounting period is 31st March students. It is mentioned here. It is mentioned 31st March. 31st March is a year, and 31st March 2024, the loss was 45,000 pounds. Now, as soon as possible, so the tax adjusted trading profit for 2022, it is 11,000 students, 23, 9,000, so 0. Bank interest, it is 500 and 500. Then chargeable gains of 0, 0 and 4,000. Then we have no students, this will give rise to our total profits. This will give rise to our total profits. So it will be 11,500, this will be 9,500 and this will be 4,500. I hope this is. Now coming to less loss relief. Students, please do remember this format. This is the format we are looking now. So first current year, carry back, then carry forward. So first will be current year, then previous year, then future year. So students, as soon as possible means, so the loss is incurred in 2024, so it can be set off against current year. To claim the previous year, first we need to set off against the current year, 4,500. Okay, the current year total income 31st March 2024, current year claim, so it is 4,500. And students, we have QCD, but we can't choose the amount to select to set off, so partial claim will not be allowed. In previous year also, no partial claim is allowed. So carry back. Now carry back relief will only be available if we use the first the current year claim has been made. As we have made the current year claim, so this we will carry, this we will students carry, this we will carry back, this we will carry back. So carry back for previous year 9,500. So students, less QCD, here it will be 250, but here it is wasted. And students, if we have, then this will give rise to our TTP. So our TTP here will be 11,250. Here it will be 0. Because everything has been claimed. So here it is 31st March 2023, 9,500. So the remaining loss will be, students, 31,000, and this will be carry forward to 2025. I hope by solving this question we are good to go with the carry back relief. And the carry back relief, students, will be carry back for the last 12 months. So here the whole accounting period was for the 12 months period. No issues in that. Now coming to loss making period for less than 12 months. How we will use it? Now coming to the next topic of loss making period of less than 12 months, accounting period prior to year of loss. So students, if the loss making period, if my current year loss my loss making accounting period is only for 8 months, then what will be the case? This is less than 12 months. The length of the loss making period is not important. Full relief is given against the current year total relief. The remaining loss can be carried back in full in the normal way. So students, if my loss making period is less than 12 months, then it is not important to consider the accounting period length. You can make the current year full claim, and normally you can carry back. Carry back means for the 12 months period. 12 months period. So students, the most important point here, we will be mentioning it in blue. So that the loss making year, if the loss making accounting period, let's take it, if the loss making period, because it is for free, loss to, if loss making accounting period is less than 12 months, students, then no issues. The loss making accounting period length is not important. So for the whole year, whatever is the total income, we can set off. So the loss will be set off against the total income of the accounting period, and then carry back in normal way. If carry back relief is claimed. If we choose to claim or set off against the previous year, then we can claim it. I hope this is clear. Now coming to short accounting periods prior to the year of loss. That means this year you are having a loss and previous year you are setting it off, and previous year accounting period is small. If the accounting period preceding the period of the loss is less than 12 months, the total profits of the accounting period that falls partly into the 12 months carry back period must be time apportioned. Means students, if our current year length period is not important, the previous year if it is 8 months but the carry back is for 12 months, so this accounting period will set off, and another, so let's take it, the accounting period is 12 months, so here 4 months we need to set off. So this needs to be apportioned. The total profits of the accounting periods that falls partly into the 12 months carry back period must be time apportioned. The loss can only be set off against the total profit which fall within the 12 months carry back period. Remember, the loss is offset on a LIFO basis against the later accounting period first. I hope this is clear. In the LIFO basis, not the FIFO basis. Now coming to the question, students. Loss period of less than 12 months. Mint Limited has the following result. Year ended 31st/3/2024. Year ended, so 12 months, but this is 9 months and this is 12 months. Tax adjusted trading losses of profit 30,000 profit, 15,000, 100,000 loss and 40,000. Interest income they have given, chargeable gain they have given, QCD they have given. Calculate the taxable total profit for all accounting periods shown above, clearly indicating how you would deal with the trading loss to obtain relief as soon as possible. So students, if in the question is mentioned as soon as possible, then current year carry back, then carry forward. We'll be studying what are the factors which will influence whether we need to select carry forward, carry back, etc. We'll be covering those rules. But now students, in this question, how we will set off? First approach is, students, the first approach is we need to, first approach is the column of each year end. So it is 31st 3 2022, 31st 3 2023, 31st 12 2023, and the last 31st 12 2024. I hope this is clear, students. I hope this is clear. Now we need to prepare your loss memorandum, students. So it is for 31st. It is for 31st 12 2023 9 months period. So the loss is 100,000. So students, please do remember the loss making accounting period. The length of the loss making accounting period is not important. So here we have first T, tax adjusted trading profits for 31st. It is 30,000, students. Here it is 15,000. Here it is 0. Here it is 40,000. Then coming to interest income, 3,000, 5,000, 10,000, and then 10,000. Chargeable gains of 10,000, 40,000 this year, 0. Then QCD. So this will be a total profits. Then loss relief. So 30, 40, 43,000 pounds. Here it will be 20,000 pounds, students. It will be 50,000 pounds. Here it will be 50,000 pounds. I hope this is clear. Till here we are clear. Now students, loss relief. As we know, our accounting period in which the loss have incurred is less than 12 months. So students, loss making period of less than 12 months, the length of the loss making period is not important. So full relief will be claimed against the current year period, and the remaining loss can be carried forward in the normal way. Normal way means 12 months. So here the loss relief, less loss relief. So students, here they have mentioned as soon as possible. So this year the first option is either we carry forward, but we need to obtain relief as soon as possible. As soon as possible means current year. So current year relief, we will 50,000. So know if the accounting period of the length of the accounting period of the loss making period is irrelevant. We need to make the whole claim against the total profits. The length, this is 9 months, it is no issues. We need to make whole claim. No issues, students. We need to make the whole claim. So it is current year 31st 12 2023 50,000. So the remaining is, students, 50,000 is still remaining. Then as soon as possible, so previous year it is for 12 months, so whole 12 months will set off. So previous year 31st, not 12, students, it will be 31st 3 2023, it will be 20,000. So the remaining is 30,000. Now students, if the remaining is, then we need to carry forward. So future year or carry forward 30,000. So this will be, students, future year, that is 31st 12 2024 30,000. And partial claim is not allowed, students, as we have here QCD. Please do remember 1,000 only. So we will be having partial claim only allowed for few carry forward. For current year and carry back, no partial claim is allowed. So this will give rise to the less QCD, student. Now QCD, it is 1,000. Here also 1,000, 1,000. It's black. Then 1,000. Here it will be wasted, students. It will be wasted. It will be wasted. So wasted, because no partial claim is allowed. If we can't elect the amount or we can't choose the amount to set off, so this will give rise to a TTP of the 42,000 pounds, 0, 0, and this will be students 19,000. I hope this is clear. Please do remember students, if loss making accounting period is less than 12 months, then no issues. The loss making accounting period length is not important. The loss will be set off against the total income of the accounting period and the carry back in the normal way if carry back relief is claimed. Now coming to the short accounting period, short accounting period, already we have covered short accounting periods prior to loss years, students. As we have seen the rules, that is, for carry back, first we need to set off against the current year. So the current year accounting period is less than 12 months, no issues. But if the accounting period is short of the previous year, then we have an issue. So in that case, students, total profits of accounting period, that falls partly into 12 months carry back period. The carry back period, as we have seen, the carry back rule is we need to set off against the whole 12 months. Please do see here, students, the total profits of previous 12 months. If previous 12 months, here no accounting period, previous 12 months. If the previous accounting period is less than 12 months, then it will be carry back to the, again we can carry back against to the next previous accounting period. I hope this is clear. Now into 12 months carry back accounting period must be apportioned. I hope this is clear. Needs to be apportioned, and the loss will be set off again in LIFO basis, last in first out, and the loss can only be set off against the total profits which falls within 12 months carry back relief. So only 12 months we can claim. So if previous year accounting period is short, then your aim must be 12 months carry back. If 2 accounting period you need to use it, students. Now we will be seeing a question so that we have better understanding. Now coming to the case of short accounting period prior to year of loss. Star PLC recent results are as follows. Tax adjusted trading profits and losses 24,000, 10,000 and 5,000 loss, interest income, and this have been given. Calculate the taxable total profit for all periods assuming the trading loss is relieved as soon as possible. So 31st/12/2021, 31st/5/2022 and 31st/5/2023. So our tax adjusted trading profits and losses are, and this is only 5 months accounting period. So 24,000, 10,000 and 0, and interest income will be 3,500, 2,000 and 6,000. So our total profits will be, students, our total profits here will be 27,500, 12,000 and here 6,000. Now we need to prepare the loss memorandum, students. Loss memorandum will be, students, 35th 5 2023, the loss of 50,000. So the loss making period is of whole 12 months, no issue. If it is shorter also, no issue. But now coming to less loss relief. So first, as soon as possible means current year 6,000. So current year 6,000 we set off. So 31st 5 2023, that is current year 6,000. So the remaining losses, students, 44,000. Now previous year. So previous year we need to for 12 months. So carry back loss relief. Carry back loss relief for previous. So carry back loss relief. We'll mention carry back loss relief for 12 months. So it is only for 5 months. Okay, 12,000. 31st 5 2022, 5 months, it is 12,000. Excuse me. So 5 months means still 7 months we can utilize, but this is 12 months, students. So only 7 months loss we can relieve. So the 7 months loss will be, students, the 7 months loss will be, students, the loss will be, students, used in current year, used carry back relief 5 months over. So 31st 12 2021, but only 7 months, students. So the income is 12,000. The total profit is 27,500 into 7 divided by 12. It will be, so this much relief is available, students, 10641. But the loss is more, so whole amount we can claim. So the whole relief can be claimed. The whole relief can be claimed. The whole relief can be claimed. So that is 16,041. So the whole relief can be claimed. So the remaining loss will be, students, 15,598. So here this we are reducing. So let's QCD netting. So the TTP will be here 11,458. This will be 0 and this will be 0. I hope the concept of short accounting period is clear. If the accounting period of previous year carry back is less than 12 months, it is less, the accounting period is short, then we need to time a portion and calculate the loss relief for 12 months. Here 5 months we have claimed, plus this year 7 months we have claimed. I hope this is clear. Now, students, we will be moving to the last relief known as terminal loss relief. We will be moving to the terminal loss relief. When a company incurs a trading loss during the final 12 months of trading. So if a company incurs a trading loss during the final 12 months of trading, it is possible to make a carryback claim. Students, same, the terminal loss relief is same for individuals and the companies. That is 36 months, 3 years, 36 months. So the terminal loss means, students, it is not the same, we'll be looking. The terminal loss means, students, the loss which have been incurred in the year, in the accounting period in which the business has been seized. So when a company incurs a trading loss during the final 12 months of trading, it is possible to make a carryback claim set against total profits before QCD of the 3 years preceding the loss making period, not 12 months. That is the preceding period, not the 12 months accounting period in which you have lost. This you can claim, and further you have a 36 months loss relief. Terminal loss relief means, students, the current year, the accounting period in which the company is incurring loss and the company is being seized or shut down. In that accounting period, if we have a loss, we can claim against the 12 months period and then we can carry back on a LIFO basis. However, the company must first claim to set the trading loss against total profits of the accounting period of the loss. So students, the terminal loss relief, when a company incurs a trading loss during final 12 months of the trading, it is possible to make a carryback relief. The carryback relief means set off against total profit of the three years preceding the loss making years, not 12 months. That is, this the accounting period in which we have lost this 12 months will not be considered. The 3 years, previous 3 years, 3 years means 36 months. But to claim the terminal loss relief, first we need to set off the trading loss against total profits before QCD of the accounting period of the loss. So first set off the loss against the current accounting period. Current accounting period, set off it. Then set off against the previous 36 months or previous 3 years in LIFO basis, where the company has prepared accounts for a period other than 12 months during the 3 year preceding the loss making. Apportionment will be necessary in the same way as for a normal carryback. So students, if the accounting period is less or small, we need to consider that we can only claim for 36 months. Either the accounting period is short or long, we will not consider it. But when we carry back, students, the carry back only we can carry back for 36 months and we need to apportion it. So let's take an example. This is the 12 months period and we have incurred a loss. We need to carry back it. So one is 12 months, one is 8 months, one is 5 months and one is 12 months. So in this case, 12 months, 8 months we can say 36 months, 12 plus 8, 20, 25, and this only 5 months we can set off. Where the company has prepared accounts for a period other than 12 months during the 3 year preceding the loss making, the 3 years preceding 3 years, apportionment will be necessary in the same way as for a normal carryback claim. The normal carryback claim we have seen, students, if it is less, we need to apportion and claim it for 12 months, so that losses are normally carried back against the proportion of profits falling within the 3 years period. Within the 3 years period. I hope the terminal loss is clear. Now coming to the short notes of us. Terminal loss relief. Terminal loss relief, students. Here, when a company incurs, when a company incurs a trading loss in the final 12-month period, 12 months of trading, 12 months of trading, it is possible to make a carryback relief, that is known as carryback relief, known as terminal loss relief. For this we can set off for set against total profit, students. But in case of individual we had seen, but students, we have already seen, but students, please do remember, in case of individuals we had seen that the losses can be set off against, the terminal trading losses can only be set off against the trading income. But coming to the case of companies, it is set off against the total profits, that is before QCD, and students, 3 years preceding, 3 years preceding the loss making period, that is of not 12 months. So students, the previous 3 years you need to consider, but the current accounting period can be short, students. The current accounting period can be short, but we'll be taking example, no issue. The current accounting period can be short, but the set off must be against previous 3 years, that is 36 months. This is 36 months, students. I hope this is clear. Then in LIFO basis, I hope this is clear. And students, to claim terminal loss relief, that is to carry back for 36 months. Then students, to carry back for 36 months, in that case, to claim terminal loss relief, that is to carry back for 36 months, first we need to set off against the loss making accounting period. First we need to set off against the loss making accounting period, then only we can set off it, students. And here also, will the partial claim be allowed, students? The partial claim will not be allowed. No partial claim is allowed. And in case of individuals also, we had seen, students, partial claim will not be allowed. Partial claim will not be allowed, students. Partial claim in case of individuals, it will not be allowed. But students, let's take an example. Here I will be mentioning an important note. It is very important, students. Note: if the last accounting period is of less than 12 months, the terminal loss relief needs to be composed as terminal loss in last 12 months. Because students, please do keep a point here. Please do keep a note here, students. The terminal loss, if we incur, the terminal loss relief will be available when we close our business. And in last 12 months of your closing your business, you have a loss. Here you need not see the accounting period, you need to see the 12 months period. If you're closing your business on 31st December, see the last 12 months period, 1st Jan to 31st March. Whatever will be your accounting period will not matter, I hope. Then if the last year, as see students, the note I have been made here, this, if the last accounting period is of less than 12 months, the terminal loss needs to be composed as terminal loss in last 12 months. So this will be loss in last accounting period if the accounting period is small, and plus borrow from previous accounting period. So this will be your total terminal loss of last 12 months, and the loss must be of loss of last 12 months, students. I hope this point is very important, students. The terminal loss will be available when, students? The terminal loss will be available when? The terminal loss relief will be available, students, when the company is shutting down, and in the last 12 months, in the final 12 months of trading, the loss has been incurred. Then we can make the terminal loss relief. Then how we will set off, students? Set off against the total profits before QCD previous 3 years preceding the loss making period. The accounting period will be short. Student, but terminal loss relief will be available when the last 12 months loss is there. Then this is an extra claim. This is an extra option, as we have seen in individual. But to claim the terminal loss, first we need to set off against the current accounting period. So let's take an example, students, so it will be clear. And no partial claim is allowed, and we need to calculate 12 months, year loss. I hope this is clear. So students, let's take an example. So Let's take an example. Let's take an example. So the company has ceased on 31st December 2024 and our accounting period is of 9 months. 9 months means the accounting period will start from 1st April 2024 students. The loss year we have students, the loss year we have, let's take an example. Let's take 10,000 loss we have students, 10,000 loss in this period, and our next accounting period will be ending of 31st March 2024. This will be for, let's take it for 3 months. So it will be 1st Jan 2024. So 1st Jan 2023 to 31st December 2023. This will be for 12 months period. And here we have a trading profits of tax adjusted trading profits of 50,000 pounds. Here the 3 months we have a profit of 12,000 pounds. I hope this is clear till here students. The question is clear. Now students, what does the terminal loss say? If you are terminating your business, you are closing your business in the last 12 months. Here students, please do see here. When a company incurs a trading loss during the 12 months of trading, it is possible to make a carryback claim. So 12 months means students, 12 months, in the last 12 months we are making a loss of 10,000 pounds. 3 months we need to include, but we are making profit. We need not consider the profit. We only should consider the loss. So loss is 10,000 pounds. And this loss will be set off first will be set off against the current year income. This loss will be set off. So let's take an example. Let's take here students, interest income of 500, 300 and 1000 here, chargeable gain of 1000, 0 and 0, and no QCD. This is our, so students, as we are terminating a business, so we can claim, what are the options which are available students? Either we can current year claim and carry back for 12 months. We have this option. Option number 1 is to set off against the current accounting period and carry back it. Current year, carry back for 12 months. But as we are closing the company, that is the company is terminating, closing or termination of the company. So we have the option of terminal loss. We can carry back for 36 months, that is 3 years. So but students, the loss here is 10,000, and in the terminal loss will be available if in the last 12 months we are incurring loss. In the last 12 months, this is 3 plus 9, we are making 10,000 loss. I hope this is clear. Now the loss is that. Now students, to claim the terminal loss, really first we need to set off against the current year. First we need to set off against the current year students. First we need to set off against the current year. First we need to set off against the current year. I hope that point is clear. First we need to set off against the current year. So if we'll set off against the current year students, less loss relief. We need to mention the memorandum also. So less loss relief means 1000, we can reduce it. Current year no partial claim, so TTP will be 0. Now we can carry back this for 12 months, 36 months students. 12 months also we have, but we are terminating, we can carry back for 36 months. But students, here first we need to set off the loss against the same accounting period in which the loss arose. We have set off here. And if the accounting period in which the loss arises is short, it is not important. It is not important. So next 3 years, so 10,000 we can, so here 9,000 is remaining. So 9,000 current year, now previous year it is 9,000. So it will be 12,300 minus 9,000. It will be shown 3,300 TTP, and this will be 51,500. I hope this point is clear, students. I hope this point is clear. We need to only consider the last 12 months loss. If in the last 12 months period, if we have any loss, we need to consider that. We need to consider that. We need to consider that. As in the last 12 months, we have a loss of 10,000. Then first we need to set off. However, the company must first claim to set off the trading loss against total profits of the same accounting period, where the company has prepared accounts for a period of other than 12 months during the 3 preceding years. 3 preceding years means the previous 36 months. In that case, students, in that case, what we need to do? We need to time a portion if the accounting period is short. As in a case, we have only set off against 3 months. If then 12 months, this also we can set off. 3 plus 12, 15. Then further 15 months, we can set off this. In LIFO basis, last in first term. I hope the terminal loss is clear. Terminal loss we need to see, students, if we incur loss in the last 12 months of trading, then only the terminal loss will be available. To claim the terminal loss, first we need to set off against the current year accounting period. Current accounting period set off, then previous 36 months. If previous 36 months, it can include n number of accounting period. If short accounting period, it will include n number. If it is long, it will include 1. Accounting period will not be more than 12 months, students. But if we have 12 months, if we have 5 months, if we have 4 months, then it will include 12 also, 5, 4 and further also it will include. I hope this is clear. Now we will solve a question. And students, this point is also important. Please do note here this point. If the last accounting period is of less than 12 months, then the terminal loss needs to be composed as terminal loss in last 12 months. Loss in last accounting period, borrowing from previous accounting period. The previous accounting period must also be in loss, students. Loss, borrow from previous. Loss from previous. Borrow loss from loss. Borrow loss from previous accounting period. I hope this is clear. Now coming to the question. Terminal loss relief. Brown Limited has been trading for many years. The company prepared its annual account to 31st March. So the 31st March, the books have been prepared each year, but change in its accounting reference date to 31st December in 22. The company ceased trading on 31st December 2023. So students, if the company is ceasing the trade, we will have an extra relief of students known as terminal loss relief. We will have an extra relief known as terminal loss relief. So year ended 31st/3/2020. So this is for 12 months. This is also for 12 months. This is also for 12 months. This is for 9 months. And year ended 31st/3/2024. This is for 12 months. I hope this is clear, students. In the year ended 31st December 2023, that is for 12 months, Brown Limited made a tax adjusted trading loss of £525,000. Calculate Brown Limited taxable total profit for all of the above accounting period, assuming terminal loss relief is claimed for the trading loss arising in the year ended 31st March 2023. So in the question they have specified, we need to claim the terminal loss relief. So in order to claim the terminal loss relief, first we need to set off against the current year total profits of the accounting period. So let's make the column, students, for each year. Let's make the column for each year. So we will be minimum reduce this so that 31st 3 2020, 31st 3 2021, 31st 3 2022, 31st 12 2022, this is for 9 months, and then 31st 12 2023. So we need to mention here the loss memorandum also. Loss memorandum 31st 12 2023, tax adjusted trading loss is 525,000 pounds. So now students, the tax adjusted trading profits, if loss is that, then the tax adjusted trading profit in the TTP computation will be 0. Here is 450,000, 87,000, 240, and students, previous, it will be carried back for the 36 months total profits. In case of individual, it was only the trading profits. Do not confuse between the companies and individuals. So bank interest, chargeable gains. So this is bank interest is 9,000, 3,000, 6,000, 1,500, 1,500. Chargeable gains 7,500. This will give rise to total profit, students. 1,500, 46,500. This will be 90,000 pounds. This will be 466,500. Now we need to claim the loss relief. Now we need to claim the loss relief, students. Loss relief. So students, as we have seen the loss relief, we need to make the terminal loss relief claim. So terminal loss relief means first we need to set off the loss against the current accounting period. So the current accounting period is current year it is 1,500, and our QCD is 30,000, students. It will be wasted. Here QCD wasted because no partial claim is allowed in the current year and carry back, but future year the partial claim is allowed, so it is wasted. So here we'll be mentioning 31st 12 2023, that is the used in current year, it is 1,500. Now we have remaining loss. So terminal loss means, students, we can use terminal loss. We can carry back for 12 months, but they are mentioned here in the question to use the terminal loss for 36 months. So 9 months, then we will be mentioning here terminal loss as 46,500. So QCD wasted here. So terminal loss 9 months 31st 12 2022, it is, students, 46,500. Then further we can claim. So we have claimed of 9 plus 12, 21. Sorry students, it is 30. 12 months period, we have 246,000. So QCD wasted here. Then students, further loss we have still. So 9, 12 plus 9, 21 months we have claimed. So still we can claim for 12 months 31st 3 21 of 90,000. here also 90,000. Here it will be wasted. So students, now 12 plus 12 plus 9. We have claimed 33 months. Now only we can claim 3 months because our loss is further. Because we have a further, still loss is not really full, students. Still the loss remaining is 141,000. So 3 months for 31st. Year ended 31st 3/20. So it will be, students, we can claim the income is 2466,500 into 3 divided by 12. This will be 466,500 into 3 divided by 12. It will be 116625. But our loss is 141. So we can claim the full amount. We can claim. So further losses are still, students. Here it will not be wasted. Here it will be 30,000 we can claim because we have. So the remaining loss will be, students, loss remaining is minus 141,000. It will be 24,375. I hope this is clear. So our TTP will be, students, our TTP will be 0, 0, 0, 0. Here our TTP will be 319,875. I hope the terminal loss relief is clear. The terminal loss relief will only be available, students, when in the last 12 months of the trading we have a loss, and we need, before claiming the terminal loss, we need to set off against the current accounting period, and the current accounting period can be short. But when we carry back, we need to carry back for 36 months, and it will be set off against the total profits, and no partial claim will be allowed. I hope the terminal loss question is good to go. Now students, now coming to the choice of loss relief. What are the factors which will affect the choice of loss relief? So students, till now in the question it was specified. Till now we have done so many questions, it was specified whether we need to claim carry forward, carry back, current year, or etc. For carry back, current year is mandatory, then only carry back, and carry forward it. It was mentioned, it was specified in the question. But now coming, if it is not specified in the question, how we will claim the loss relief? You need to claim the loss relief. How much tax saving is benefit? How much tax saving can be done? And students, if it is mentioned as soon as possible, means current year, then previous year, then future year, as soon as possible. So choice of loss relief, factors that influence choice of loss relief. Where there is a choice of loss relief available, the following factor will influence the loss relief chosen. Tax saving, the first one will be the tax saving. If we set off against previous year or current year, future year, in which there is high interest or corporation tax, we will have a good tax saving. Then coming to cash flow. Cash flow means if we set off against previous year, we will receive refund from the HMRC. So this is the meaning of cash flow. Wastage of relief for QCD. Sometimes we are wasting our QCD in case of current and previous year. So students, these are the three conditions which we need to see in order to see which relief will be applicable. Now coming to tax saving in more detail. So the factors which will influence the choice of loss relief, either we need to carry forward or we need to claim current year and carry forward. Either we need to claim current year, previous year and then carry forward, or the terminal loss. So these are the three main factors. First, we need to see the tax saving, cash flow and wastage of relief for QCD. Tax saving. The company will want to save or obtain a refund at the highest possible rate of tax. So the company will want to save the tax at highest rate. Prior to FY 2023, there was only one rate of corporation tax of 19% for several years. A claim to set losses against profits arising before 1st April 2023 will always be saved at 19%. So students, if we set off against the previous year, the saving will be always 19 percentage. However, since the introduction of two rates of corporation tax with marginal relief, it may be possible to save tax at higher rate. So students, when coming to the case of tax saving, we have seen that we need to save the tax. We will set off the law such that we will have a saving at the highest rate. But till previous year, the Finance Act of 23, prior to Finance Act of 23, that is Finance Act of 22, we had the rate of 19 percentage flat. So no higher rate or lower rate. So it will be saved at 90%. But when coming to the introduction of the rates for the Finance Act of 23, we have two rates, small rate and main rate, with marginal relief available. So this is the tax saving. So the factors affecting the choice relief are tax saving. If your client says, as a tax advisor, if the client says that we need to save the tax at a higher rate, then we will use the tax saving as the factor. If not, now coming to the rate, students. The preferred order to claim relief to achieve the highest tax saving is against main rate less marginal relief, that is 26 point. As we have seen that the 26.5 percentage is in the form of tax band, and this will be the marginal rate tax. And student, in the case of questions, in the case of loss relief questions, the examiner will not mention the dividends, because if it is mentioned dividend, the calculation will become too complex. Instead, we need to use these rates as tax band. If the company has 66,000 pound of income and we are setting off losses, so the relief will be at 16,000, it will be at 26.5 percentage, and for the rest 15,000 it will be at the 19 percentage. So the main rate less marginal rate 26.5, main rate 25 percentage, small rate at 19 percent. At the starting of the class, students, we have already discussed this. If the dividend income from non-associated company is not given, then we can calculate the tax using the tax band, that is 0 to 50,000 pound at 19 percentage, 50,001 to 250,000 pound at 26.5 percentage, and about 250,000 pound at 19 percentage, students. I hope this is clear. I hope this point is clear, students. The effective rate of tax in the margin or marginal rate is not provided in the exam. You need to learn this. This tax band will not be provided, students. This you need to learn. Marginal rate of tax. The marginal rate of tax of 26.5 percentage only applies to the profits between the lower and upper limit, not the total profit. It is also only exactly 26.5 percentage when a company does not receive any dividend from non-group companies. But the principle still applies. If dividends are received from non-group companies, that the rate in the margin will be, students, it will be higher. Students. It will be higher. In this case, it will be higher, students. I hope this point is clear. The marginal rate, and this will be used as the tax band, but the principle still applies. If dividends are received from non-group companies, that the rate in the margin will be higher, students, will be higher. So next, coming to the cash flow, a company's cash flow position may affect its choice of loss relief. So if company's cash flow position is affected, then the choice of loss relief will also be affected. Note that when a loss is carried back, it will result in repayment of corporation tax, whereas the carrying loss forward will only result in a reduction of future tax liability. I hope this is clear. So as we have seen, if the cash flow position of the company is affected, then the choice of the loss relief will also be affected. Students. Then loss of reliefs for QCD. Unrelieved QCDs cannot be carried forward and relieved against future profits. It may therefore be beneficial to restrict the amount of loss offset against total profits in a loss carry forward claim. Only in the case of carry forward we can restrict the amount so that our QCD is not wasted. Only partial claim is only allowed in the carry forward claim to ensure that there are sufficient profits to offset the QCDs, because students, the QCDs cannot be carry forward or carry back. If we will not claim it in the current year, it will be wasted. Remember though that the amount of a current year and prior year loss carry back claims cannot be restricted, and so these may result in the wastage of QCDs. This will result in the wastage of the QCD, students. It will result in the wastage of QCD. I hope this is clear. As we have seen, students, the factors which will affect the loss relief are tax saving, cash flow, wastage of relief for QCD. Tax saving, we can set off the loss where the tax has been charged at higher rate, but for the previous Finance Act, the rate of tax was 19%. It was 19%. And then cash flow, if the company's cash flow is affected, then we can choose the loss of the choice of loss relief will also be affected. And if we want to save the QCD, then also the choice of loss relief will be affected. Students. I hope this is clear. Now students, we will be seeing how to deal with questions Now students, we will be seeing how to approach a question in the examination. If it is mentioned how to claim the loss relief, which will be beneficial. I hope this is clear, students. Now students, coming to the how to approach and question in the examination. These 5 steps needs to be followed. Loss question will often give you taxable total profits information for a company for a number of years. This may initially appear. Students, let's take an example before moving to this approach. Whenever in the examination question, you will be provided with the loss for 1 year, and many years will be provided, I hope this point is clear, first point. But now, if in the question it is clearly mentioned whether to claim carry forward, carry loss or carry back, we will offset it. We will use, if the question is mentioning as soon as possible, we will offset current year, prior year and then future year. If the question does not specify the loss relief, then we need to calculate the loss relief using multiple choice relief, the loss relief, and we need to see which will be benefit to the taxpayer. I hope this is clear, students. The claiming of the loss relief. If in the question, in the examination question, if it is specified whether to claim any relief, like if the question specify you can only claim the carry forward or carry back, then you must stick to it. If the question does not specify, then we will see how we will approach the question. I hope this is clear, students. I hope this point is clear. Now coming to this. Loss question will often give you taxable total profits information for a company for a number of years. This may initially appear daunting. Means it will be very confusing whether to offset current year, future year, which needs to be claimed first. However, the following step-by-step approach will provide you with a logical way to attempt the question and ensure that you offset the loss correctly. Step 1, Step 2, Step 3, Step 4 and Step 5. Write out the skeleton TTP form pro forma, remembering to leave space for the loss relief claims and laying out the years side by side. The columnar approach we need to make, and we need to make the tax computation format, and we need to leave the space for the space for the loss relief must be left. Then the second, fill in the pro forma with the TTP information provided, ignoring losses relief. Ignoring loss relief. In the year of loss, the tax adjusted trading profit will be nil, students, as we have already seen this. Then keep a separate working for the trading losses. Update the working as the loss relief is relieved. Now we need to keep a separate working for the loss trading loss. We have seen the format, total profits less loss relief. This we need to keep a separate working, and we need to prepare loss memorandum for each loss. Consider the loss relief options available where there is more than one loss to set off. So students, if in the question it is mentioned 22, 21, 22, 23 losses are there, then students, first you need to consider the earliest loss. The loss which is earliest, let's take an example of 21. So this you need to first set off. If in 22 no loss, then 23 you have a loss. So first you need to deal with 21st, the loss in the finance year of 21, and then finance year of 23. So where there is more than one loss to offset, deal with the earliest loss first. So we need to deal with the earliest loss first as soon as possible, students. We need to deal with the earliest loss as soon as possible. Then these three steps are basic, students. First we need to draw the columnar approach and the loss memorandum, and if we have two or three loss, first we need to claim the earliest loss which have incurred first. If the question states relief is to be claimed as early as possible or in order to maximize the tax saving. If the question states, students, you need to claim the loss as early as possible or in order to maximize the tax saving. If the question mentions you need to claim the loss as soon as possible or maximize the tax saving, then the order which you need to follow is current year claim followed by a carryback claim, that is previous 12 months or 36 months for a terminal loss. If terminal, the company has been terminated, then you use terminal rather than the carryback claim. Carry forward any remaining loss and offset against the future profit. So students, now choice of loss relief. And students, the tax band will only be used if the dividends are not there from the non-company, non-trading company, non-associated company. Sorry. Now coming to choice of loss relief, the factors affecting are tax saving, cash flow, and the third one is student, cash flow, tax saving, cash flow, and wastage of QCD. So students, we need to follow a approach. We need to follow this approach. So the approach says that step 1, the skeleton of the pro forma needs to be, for each year it needs to be filled. Then the first two steps are the same. The skeleton needs to be drawn and the numbers needs to be filled. If loss, we will write 0. Then we need to keep a separate working for trading losses. Then we need to claim the loss relief. If the loss relief which are incurred first, then we need to claim the relief for the losses which are incurred earlier, first we need to claim the loss relief for that loss, then coming to the next loss. But students, if in the question it is specified claim the loss as soon as possible or maximize the tax saving, then first current year, then previous year, that is carry back, then future year. But if a question asks you to identify the option available and the tax saving for each option, consider in turn the three options. If the question will not specify anything, then you need to calculate the loss relief for three options: carry forward only, current year claim and carry forward any excess, current year carry back and carry forward any excess. If question asks you to identify the options available, the question mentions what are the options available to claim the loss relief, then we need to calculate the loss relief for three cases. First, directly carry forward it. The second option will be current year, then directly carry forward it. The second case will be current year, then carry back, then excess carry forward. I hope this is clear. Identify the amount of tax saving, the loss of relief for QCD and cash implication under each option, and conclude as to which option is preferable. Means we need to consider all the three cases and we need to see the tax of saving, the loss of QCD in all the three cases and the cash flow implication. Then we need to select the appropriate loss relief. Work out the revised TTP after the appropriate loss relief. After claiming any one loss relief, we need to select the appropriate loss relief. Now students, we will be doing a question. So before that, we will be making a format approach to the question, loss question. So students, the first step will be students, the skeleton. We will first draw the skeleton for each skeleton TTP pro forma for each year mentioned in the question. The step number 2 is students, fill the TTP pro forma, and if tax adjusted trading loss, then sorry students, fill the TTP pro forma, and the second step will be then if loss in any accounting period, then tax adjusted trading profit will be students nil. Then coming to the step number 3. Step number 3 was keep a separate working for the trading loss, that is the loss memorandum needs to be prepared and the space in the pro forma needs to be kept. Then coming to step 4. The step 4, the first important point is students, if 2 or more losses are there, then deal with earliest loss relief first. Earliest loss first. Then if question specifies question states relief is to be obtained as early as possible, or in order to maximize tax saving. Maximize tax saving. So maximum. In this case, students, if the question specifies, if the question states relief is, if the question states relief is to be obtained as soon as possible or in order to maximize tax saving, then we need to follow the same. First, current year relief, current year, then excess is there, current year, followed by carry back relief, that is carry back 12 months or 36 months if terminal loss. Then the next is carry forward. Then students, the step number 5, no, the step number 5, if question ask you to identify the option available, the options available and the tax saving for each option, consider the 3 options. So if question asks you to identify the option available, then we need to consider all the options. That is, first, carry forward only, current year, excess, carry forward. The third option is current year, excess, carry back, further excess, then carry forward. Carry forward only, carry current year, if excess is there, carry forward. Current year, excess is there, carry back. If further excess is there, then carry forward. So if this is the approach, we need to monitor all the 3 options. And select the best one. So the step 5 was, students, work out revise TTP after the appropriate loss relief. I hope this is clear. Now we will be seeing a question so that we have a better understanding of the choice of loss relief. Loser Limited prepare its account to 31st March. The company's recent results have been as follows. So year ended 31st/3/2023, 12 months. This is also 12 months and this is also 12 months. So tax adjusted trading profit is 200,000, 20,000 and 200,000. Interest income 7,000, 5,000, 6,000 QCDR. Advise Loser Limited of the loss relief options available for the trading loss arising in the year ended 31st March 2024 and calculate the amount of tax saved for each option. So students, as here in the question they have not specified that the loss relief must be as soon as possible. See here students, the first approach will be, we'll draw the column. Let's start with this. The step number 1, the skeleton needs to be prepared. Okay, step number 1, the skeleton needs to be prepared. 31st/3/2023, 31st/3/2024, 31st 3 2025. We'll be going with the format, students. Trading profits. So the first we have drawn, so trading profits, then interest income. So this will give rise to total profits, then students less loss relief. So we'll leave space, less QCD, then taxable total profits. So students, here now we need to fill step number 2, fill the pro forma. So taxable trading profit is 200,000. Wherever we have a loss, then the tax adjusted trading profit will be 0, students. Here we have 200,000 pounds. Then 7,000 income, interest income 5,000 and 6,000. So the total profits will be, students, here it will be 5,000 and here it will be. Now we have done this. Now first, then keep a separate working for the loss relief. So we need to prepare the loss memorandum, students. We'll be making here only the loss memorandum. So the loss memorandum will be, students, as we have incurred the loss 31st 12 2000, which year 20 31st 3 it is 24. Okay, students. Loss of 20,000 pounds. Now step 3 done. Now coming to step 4, whichever is the loss, if 2 or 3 losses are there, when we need to claim the earliest loss, but only one loss is there, then in the step number 4, students, if the question specifies claim the loss as soon as possible or claim the loss or maximize the tax saving, then we will go with the approach of current year, previous year, carry back, current year, if excess is there, carry back, or if further excess is there, carry forward. But here, students, this will not be applicable because the question is stating what are the options which are available. What all are the options which are available, students. Now, students, now coming to the option number 4. Step 4, options available. First option, students, first one is carry forward for 31st 3 2025. So if we carry forward, students, if we carry forward it, we will set off against the 31st March. So if we carry forward to, so 20,000 will be offset and the tax saving will be at, students, the tax savings will be, students, at what rate? The tax saving will be at, students, 26.5%. Please do remember, as the total no dividend is provided, so the TTP and the taxable total profits and the TTP and the AP will be equal. No, students, here we have a QCD. No, the QCD is mentioned in question. 1 minute, let me check. Okay, the QCD is mentioned. Okay, students, no issues. So in this case, our TTP will be 206,000 less 2,000, as so our TTP will be 204, and this is within the upper limit and lower limit. So students, use the tax band here because the TTP and AP are equal, so we can use the tax band. As we have no dividend income from non-associated company, so the saving will be at 26.5% because this is within the band of 50,000 and 250,000 pounds. So this will be a tax saving of 5,300. This is the option 1. Now coming to option 2, students. The option 2 will be current year, then carry back. Current year, no students, it will be current year and carry forward. Current year, carry forward. So students, in this case, current year, can we set off? Yes, students, we can set off, but we can set off only 5,000. We can only set off 5,000 and the QCD will be wasted. So current year, that is 31st 3 2024. So 5,000. So 5,000 we can set off, students. And students, if we set off the 5,000, if we set off 5,000, QCD will be wasted. QCD will be wasted. But the tax will be saved at, students. The tax will be saved on 5,000. But if we earn 5, that is, the tax will be saved at TTP. So our TTP will be 3,000. Our tax will be saved at, our tax will be saved. So students, we have setting of 5,000. If we set off the whole 5,000, the tax will be 0. So the tax will be 0. But students, our TTP is only 3,000 into 19%. So the tax saving will be 5,000. So this we have set off. So 5,000 minus QCD. So QCD, this will be, students. So 3,000. On 3,000 we are saving the tax. I hope this point. In future years, we were claiming the QCD. We had excess income, so we were able. But here QCD is wasted, and the tax will be claimed at 3,000 only. Take an example, student. Let's, if we reduce it, it will be 0. But a tax, if we will not claim this option, we will reduce the QCD. We will reduce the QCD by 2,000, and only on 3,000 we will pay the tax, that is at 19%. So our saving will be 19%. Our saving will be 19%. I hope this is clear, students. So here we are saving 570, but the QCD is wasted of 2,000. Now coming to then the further carry forward, students. Carry forward. So 15,000 we can carry forward, and here we'll make a saving of 15,000 into 26.5%, because the TTP and the TTP and augmented profit will be same, and it lies within the band of upper limit and lower limit. So it will be at this. So this will be a saving of 3,975. So the total saving will be, students, this plus this, the total saving will be 4,554. Here in the first case was 5,300. Here it is 4,554. Now coming to option number 3. Current year, carry back and then carry forward. So current year, students, same. Current year it will be 5,000 we can set off, and 19% only saving will be there. So the savings will be at 19% of TTP into 19. So it will be 570. Then carry back for 12 months. So if we carry back, students, if we carry back, we can set off. So okay, let's take an example. So we will carry back it, students. So if we carry back, we can set off the whole amount, 15,000, and this is at the, as this is of the previous finance act, students, as this is of the previous finance act, so flat 19% will be saved. So this will be 2,850. So 570 plus 2,850, it will be saving of 3,420, and QCD is wasted here, students. Now which option is the best? Here we are saving 3,420. Here 4,545. But in the case number 1, we are saving 5,300, and our QCD is also not wasted of the current year. I hope this is clear. But many of them will say, sir, we are paying your tax, but on the 19% also will be paying the tax. So 5,300 minus 570. That also, this is the best option. So students, in this case, please do see here. Here the QCD is wasted and it will not be charged. You are saving. But when we select the option number 1, student, we are saving 5,300, but we need to pay tax on the current year, and current year tax will pay on the TTP. Our TTP is 3,000 into 19 percentage. This will be, students, 570. If we reduce also 5,300 minus 570, it will be 4,730, and this is the highest option. But we are saving the highest amount here, and the QCD is also not wasted. So we will select the option number 1. We will select the option number 1, which gives the highest tax saving. Which gives the highest tax saving source. Now, following the option number 1, that is, will carry forward the relief. Carry forward it. So if we carry forward, students, we will set off it. Less QCDs. Here it was 2,000. It was 2,000. 2,000. So our TTP will be 5, 6, 7,000. So this will be, students, 199,000 pounds. So the loss relief will be used in 31st 3 2025. So no sorry students, it is 20,000, no? So 206 minus 20,000 pounds minus 2,000 pounds, it will be 184, students. It will be 184,000 pounds. I hope this is clear. So we need to follow this approach so that we have a better understanding. I hope the approach is clear, students. If the question specify claim as soon as possible or maximize the tax savings, then you need to follow the current year, carry back, then carry forward. If the question mentions what are the options available, then we need to calculate for the 3 options and we need to select which provides the highest tax saving and the QCD is not wasted. Now coming to the case of property business losses. Property business losses, students, this we have covered in a previous chapter. Again, they will be revising the rules for the property losses. Property business losses are automatically offset mandatory against total profits for the current year period. So if we have a property losses, we can set off against the total profits for the current period. Any excess can be carried forward and offset against future total profits of the company. So the property losses, first we need to set off against the current year total profits. Then we can carry forward it. And carry forward it is for indefinite period of time. And the partial claim, students, we will be seeing. A claim to carry forward a loss and offset it against total profit of future period must be made within 2 years. Within 2 years of the end of accounting period in which the loss is relieved. If it is carry forward, then end of the account 2 years from the end of the accounting period in which the loss is relieved. Excuse me. There is no carry back facility for property business losses. Partial loss claims are not allowed when offsetting the loss in current period, but are allowed for losses brought forward from earlier period. Means carry forward, it is available. Current year, not available. If applicable, property business losses are set off before trading losses. If applicable, property business losses are set off before trading losses. So we can set off property business losses before trading losses also, or after also, or before also, either way. Now coming to the case of property business losses, students. Please do remember, students, the 2-3 important discussions of property business loss is that we can set off against current year and then future year. We need to first set off against the current year and then future year. We need to set off against the current year and then future years. Partial claim is not allowed for current year and partial claim is allowed for future year. So question, R Limited has the following results. Year ended 31st Jan 2024-2025. So tax adjusted trading profit 12,000, 7,000. Property income losses of 12,600 and 800. Interest income 500,000, 400. Qualifying charitable donation 505. Calculate taxable total profits for both years assuming all reliefs are claimed at the earliest opportunity. So as early as we are claiming the loss. 24, 25, tax adjusted trading profit 12,000, property income or losses, interest income, and then total profit 12,500. This will be 7, 8,000, 8,000, 9,200. Then students, less loss relief. Now we need to prepare the loss memorandum also, students. Loss memorandum. So it is 24 year ended 31st Jan 24. The losses are 26,600. Now students, less property loss relief. So we need to set off against the current year and no partial claim is allowed. So we'll set off the whole amount. So less QCD will be wasted, students, because no partial claim is allowed. So our TTP will be 0. We had claimed 12,500 for current year. Then carry forward. So carry forward, the remaining loss will be, students, the remaining loss will be 10,100. The remaining loss will be, students, 10,100. Now students, coming to the next year, we can set up, but partial claim is allowed, so we will not waste our QCD. We will not waste our QCD and we will reduce 8. So less 31st 1 2025, carry forward, so 8,700. So the remaining loss will be, students, 1,400. So here, students, we will not offset the whole amount because we will not waste our QCD because partial claim is allowed. So we can claim partially the amount such that the QCD will not be wasted. I hope the property losses is clear. Property losses need to be set off against the current year and then carry forward. For carry forward, we have partial claim. For current year, no partial claim is claimed, but the claim for carry forward must be made within 2 years from the end of the accounting period in which the loss is relieved. I hope the property business loss is clear. Now moving to the capital losses, students. First, we'll be making the property business loss. Current year total profits. Then second option is carry forward and set. Carry forward and set off against future total profit. And students, partial claim is allowed for carry forward. Partial claim is not allowed for current year. I hope this is clear. Now moving to capital losses. If we have capital losses, how we will set it off? How we will set it off, students? How we will set it off? So this is the last topic, students. Now coming to capital losses. A capital loss incurred in an accounting period is relieved against any chargeable gains arising in the same accounting period. Any excess losses are then carried forward for relief against gains arising in the future accounting periods. So students, when coming to the case of capital losses incurring in an accounting period is relieved against any chargeable gains arising in the same accounting period. So the capital losses will only be set off against the capital gains. But when compared to trading and property losses, it will be set off against the total profits. But coming to the case of capital losses in an accounting period is relieved against any chargeable gains arising in the same accounting period. Now, any excess losses are then carried forward for relief. If excess losses are there, if we are not able to claim the whole capital losses in the same accounting period against the capital gains, then the capital losses will be offset against the future gains arising in the next accounting period. Note that relief is automatically, no claim is required. A capital loss may never be carried back and relieved against chargeable gains for earlier period. Capital loss can only be set against gains. They must be set against the company's income. May not be set off against the income. Only gains. It cannot be set off against the company's income. Partial claims are not allowed. So partial claims are not allowed either in the current year or future years, students. Either in current year or future years, partial claim is not allowed. Partial claim is not allowed either in current year or future years. And carry forward can be for indefinite period of time. Indefinite period of time. So students, now coming to capital losses. So capital losses can be set off against capital gains in the same accounting. Capital loss can be set off against capital gains in the same accounting period. And then if excess capital loss, then it can be carry forward to next accounting period and set off against carry forward to the next accounting period and set off against future, that is the set off against the future capital gains. Set off against future capital gains. It can be set off against the future capital gains. No partial claim is allowed. No partial claim is allowed for both current year and future year. I hope this is clear, students. Now we will be solving a question so that we will be having a better understanding. This includes a trading loss also, students. This will also include a trading loss. This will also include a trading loss. Now, R Limited started to trade on 1st Jan 2023 and has the following results. Year ended 31st December. Okay, the year end is just 31st December. Trading tax adjusted trading profits or loss. So 37,450. Here it is 0 as we have a loss. So then interest income 1,300, 1,400, 1,600 students. Then chargeable gains, we have 6,000 here loss, so 0, 0, and this is an 13,000 profit. So students, it is 13,000. We have written, first we'll write the format, total profits. This is 38,750. This is 1,400. This we will be doing the total. So now students, loss relief, loss memorandum. Now the loss memorandum, students. So here they mention the loss relief is claimed as early as possible, students, as early as possible. So it is 31st loss memorandum of 31st/12/2024. We incurred a loss of, students, 81,550. So before that, students, we have a capital loss, and capital loss we need to set off against the capital gains. Loss memorandum, we need to write another loss memorandum for capital gains, that is in which year we incurred, students, 31st December 2023. So 31st December 2023, we need to first consider this loss because this is the earliest loss, capital loss of 6,000, and this less will be relieved against this less against the capital loss of future year, that is of 31st December 2021. This is 6,000, so it will be 0. So students, we need to set off this. So here it will be 13,000 minus 6,000. It will be, students, 7,000. I hope this point is clear. Now coming to the next loss, the trading loss, because the loss needs to be set off in the earliest order. First we had capital loss, we have set it off. Now coming to the trading loss, as the question has said, as early as possible. So as early as possible means, students, current year, previous year, then future year. So 1,400 less 31st/12/2024, 1,400. So QCD will be vested, students. Then carry back the whole amount because our loss is more, students. Then so 31st/12/2023, it is 38,750. So our remaining losses, student, this is current year, this is carry back relief, current year relief, and our remaining will be, students, and carry back will be only available if current year relief has been made. We have already made the current year relief, students. Minus 1,400 minus 38,750. So the remaining loss is 41,400. Now students, carry forward. So now students, for carry forward, we have 28,600. Can we set off the whole amount? Yes, but students, carry forward partial amount can be claimed, so the QCD will not be wasted. Here in both the cases, QCD wasted, but carry forward we have the restriction, we can restrict the amount. So 3,000, the TTP will be, students, 0, 0. So your TTP will be 0, and this how much we can set off, 25,600, because partial claim is allowed. Partial claim is allowed, so we can restrict the amount such that we can restrict the amount such that our QCD will not be wasted. This is your remaining loss. I hope this is clear, students. The capital loss is clear. Capital loss needs to be set off against the current year capital gains. If no current year capital gains, then we need to carry forward and set off against the capital gains arising in future accounting period. So capital losses needs to be set off against the chargeable gains arising in the same accounting period. Means we need to first set off the gains. Capital losses can be set off against the chargeable capital losses, chargeable gain in the same accounting period. If excess loss is there, then we need to set off against the future capital gains, then future chargeable gains, of the in the future accounting period. And no partial claim is allowed, students, in both the years, current year or future claim. I hope by solving this question we are good to go. Now students, in our today's class we have completed the trading property losses relief, property business loss relief and capital loss relief. These three topics have been completed and we have completed this chapter. We have completed each and every topic under this chapter. I hope students today's session was very interesting and you understood each and every topic of this chapter. If you have any queries, please do message in the WhatsApp group so that your query gets solved. So thank you students. Have a good day. Bye bye.